Storage levels of important metals continue to hit lows. Time to look at mining companies. Storage levels of many important metals are still low and there is no improvement in sight. At the moment, the evil R word, recession, is being used again and again, but we see no reason for it in view of the still robust labor markets and the brutal public debt worldwide. Interest rates will not rise to 4 or 5% to combat the central bank's homemade inflation, otherwise there is a threat of global sovereign default. Countries like Italy, Greece, the USA and France simply cannot afford such interest rates. That is why we should start looking at commodities. Let's start with the king of commodities, copper. Stocks have fallen significantly to around 250,000 tons. The copper price itself is temporarily depressed by recession fears. We see good support at $3.50 per pound and we think the worst is behind us. If the copper price turns upwards again, we see a first target of $4.75 per pound. Copper companies such as Copper Mountain, Hennen Metals, Kutcher Copper and Oceana Gold, which produce copper in the Philippines, have been hit particularly hard. We see all four shares at buy levels and as completely oversold. Let's move on to tin, a metal that many investors do not have on their radar at all. Here, too, storage levels have fallen and are very low. In the exploration sector, we see Tin One in Canada as very promising, and in the development, we like London-based First Tin very much. Of interest here is First Tin's intended mining in Germany and in Australia. Tin is becoming increasingly scarce and massive deficits are expected within the next 5 years. Nickel seems to be entering a new supercycle, and here, too, inventories are horrible low. If we continue to believe in the electric mobility turnaround, nickel is an indispensable metal. Canada Nickel is a clear favorite as the company is developing one of the world's largest nickel projects in Canada and can also store CO2 in the tailings. The share is totally oversold and has now reached our calculated lower price target of $1.50. At the latest, here one should think about buying, and especially after doubling the resource yesterday. Think looks just as bad and has reached a multi-year low in storage. Griffin Mining, in particular, as a British company with a great mine in China, offers itself as investment. The point and figure chart has turned downwards. We see a buy level around 83 to 85 British pence. The company is doing a great job and is already thinking about dividend payments. All in all, the markets are out of control and not very comprehensible. Everyone wants the energy transition, e-mobility and sustainability. Without raw materials, none of this will be feasible. We are at the beginning of a major multi-year commodity cycle, even if recession fears outweigh everything at the moment. However, this is precisely what opens up buying opportunities in great companies. I'm Jochen Staiger, Swiss Resource Capital, in partnership with Dukascopy-TV. Thanks for watching us and bye-bye from Geneva.